Good morning, ladies and gentlemen. My name is Vasil Dikov, Senior Account Manager with GDMFX. I'll be bringing you today's market outlook. We'll start with the North American markets. The events from yesterday: the 10-year note auction was at 0.165% higher than the previous one, and we had an interest rate decision statement from the Bank of Canada. The economic pieces are starting to fall into place for Stephen Poloz, giving the Bank of Canada governor latitude to keep the bank's key interest rate unchanged. Many of the dark clouds that have hung over Mr. Poloz's decision-making in recent months have begun to clear. Exports are rebounding, fear of a global recession is fading, and the battered price of oil is on the upswing again. The federal government is also poised to inject a hefty dose of fiscal stimulus to help revive the sluggish economy in its March 22nd budget. As a result, the central bank opted to keep its key overnight interest rate unchanged at 0.5% on Wednesday, where it has been since last July, when it cut rates for a second time in 2015. The Dow was moving sideways yesterday. The Nasdaq was 23 points up. The Dixie was up from 97.38 from 97.30. The US dollar versus the Canadian dollar was 175 pips down, and the US dollar versus the Japanese dollar was 60 pips up. Today we're going to have the initial jobless claims, the monthly budget statement, and in Canada, Governor Poloz is going to give a speech. The EU markets, the DAX 30 and the CAC 40 are still keeping rather neutral, as in the entire week. No large movements there. Weak reports from Germany's export pressured the trade balance report in the red. The CPI reports from Germany are due tomorrow. The euro is under pressure before the statement and the conference of the European Central Bank. Moving on to the UK, the NIRSR GDP estimate is 0.1% weaker than the previous at 0.3%. Industrial production for the year is 0.2% as expected. Manufacturing production on a yearly basis 0.6% better than expected at minus 0.1%. Industrial production for the month 0.2% weaker than expected at 0.5%. And manufacturing production month-on-month 0.5% better than expected at 0.7%. The risk housing price balance 1% weaker than expected at 50. Despite the modest improvement in the manufacturing field, both on a yearly and monthly basis, the pound was little changed versus the dollar. The sterling managed to appreciate 0.4% against the euro. With the global economy slowing down and putting its weight on the UK exports field, investors are becoming increasingly worried about the prospect of the UK leaving the European Union in the referendum in June. The FTSE 100 gained 24 points yesterday and closed at 6,147. The pound was 240 pips down versus the Canadian dollar. It was 330 pips up versus the New Zealand dollar, and it was 111 pips up versus the Australian dollar. On Friday, we're going to have the goods trade balance, the trade balance non-EU, total trade balance, and the consumer inflation expectations. Moving on to Asia. From Japan, we had the foreign bond investment 605.5 billion yen, better than the previous at 537.9 billion yen. The foreign investments in Japanese stocks was 877.3 billion yen, better than the previous at minus 138.5 billion. In China, the PPI on a yearly basis was 0.4% better than the previous at minus 4.9%. The CPI on a yearly basis 0.5% better than previous at 2.3%. The CPI on a monthly basis 1.1 better than previous at 1.6. Asian stocks climbed for the first day this week amid speculation central banks will provide additional stimulus to bolster global economic growth. The Nikkei 225 was 265 points up. The Canadian dollar versus the Japanese yen was 150 pips up. Today we're going to have the BSI large manufacturing for the first quarter, Saturday from China retail sales, yearly, industrial production and urban investment on a yearly basis as well. In the Pacific, the Royal Bank of New Zealand interest rate decision, the US session Forex traders had a pretty good reason to stay over time, as the Royal Bank of New Zealand dropped a bombshell on the markets with its surprise interest rate cut from 2.50% to 2.25%, a rather unexpected event. Instead, the Royal Bank of New Zealand head Graham Wheeler stepped heavily on the dovish pedal by adding that further easing movements might be needed to bring inflation back to the target levels. Policymakers noted that weaker growth in China, emerging markets, and the sluggish growth in Europe is weighing on commodity prices, posing a huge challenge to their dairy sector. The Kiwi versus the US dollar fell from resistance near 0.68 to a low to 0.6635. The Kiwi versus the Japanese jumped from 77 to test support in 75, 200 pips movement. The Euro versus the Kiwi was up from 1.65, minor psychological mark, 450 pips move. Today we'll be waiting for the New Zealand trade balance, year-on-year, month-to-month, imports and export. And now moving on to the commodities, the crude oil's stock exchange rose from 3.9 million barrels from the week ending on March the 4th at 521.9 million barrels. US crude oil inventories are at the historical high levels for this time of year. The US crude futures surged by 4%, erasing all of their losses from the previous day's sell-off following the release of a bullish US supply report on Wednesday morning. Gold futures were down sharply in North American trade on Wednesday as the metal's safe haven appeal was dented amid a recovery in oil prices and global equity markets. The S&P 500 index had a range of 15 points at 1,090 right now. The gold had a range of $21 down to $1,248 now. Silver had a range of 25 cents, it is at 15.24 now. The crude had a $2.20 range at 38.10 going down this morning. Natural gas is trading at $1.78 at the moment, range of 7 cents. Today we're going to have the natural gas store exchange, and on Friday we're going to end with the Baker Hughes oil recount. Thank you and have a nice day.